Once again, ladies and gentlemen, boys and girls, and children of all ages, you are now tuned into the Investor Show. We're going to be talking about, let me make sure I got my topic up here. Where's my topic up here today? Stocks and Bitcoin. Man, they had a massive fall, continue to have a massive fall, but we're seeing real estate is still holding on strong. Ladies and gentlemen, if you haven't done so already, go ahead and make sure you hit that. Oh, thought I hit my little cue.
Hit the subscribe button. Hit the bell icon. Hit that like, comment, and share button.
Once again, ladies and gentlemen, boys and girls, and children of all ages, you are now tuned into the Investor Show. As always, this is your gracious host, the Prince of Investing, Prince Dykes, coming to you guys and girls live all the way from the beautiful city and state of Denver, Colorado. Don't forget to hit that like, subscribe, comment, and share button. And as always, I don't have a lot of time, and I definitely know you guys and girls don't have a lot of time, so we are going to jump straight into it. If you are catching the episode live and you want to comment, definitely feel free to comment and let me know what you guys and girls are thinking while we're live. All right. So the first thing, ladies and gentlemen, y'all already know stocks have felt the last couple of days. Stocks have been going down. Bitcoin has been down these last couple of days, leaving a lot of people wondering what's going on. Now, ladies and gentlemen, we're going to end this episode. We're going to discuss the overall. Let's step away from what we're seeing every day, and we're going to take a look at what is really going on. Now, Prince, what do you mean by what exactly is going on? Y'all give me 1 second. Let me change up my microphone here. I should have already had this done. Give me 1 second here. What is going on? But if you're coming in live, feel free if you want to say hello. Tell me where you're from. Tell me where you're checking in from. 1 second. All right. Let's see. Oh, no, that's not. There we go. I think that might be a little bit better. All right, ladies and gentlemen, tell me where you're from. If you are catching this episode live, we're going to have a nice little conversation. So today's topic, we're going to talk about the index's performance so far this year. Then we're going to look at the labor shortage that we are discovering, and we're going to hear from the Brinker International CEO. If you know who Brinker is or who they own, please comment below. But we're going to hear from them. I'm going to play a clip from them. The next thing we're going to do, we're going to talk about the rising costs of labor. And we're going to look at reports that dictate that. And then we're going to look at real estate at the end there. The only thing that we're seeing that's picking up, let's start off with real estate. Why not? Let's start off with real estate. So, already one of my sources I love to go to, I love to pay attention to your Mortgage and Bankers Association. Let's pull them up here. The Mortgage and Bankers Association. I'm going to share the screen here. Where they at? I already had them queued up. So boom, let's look at the latest report on real estate, the Mortgage and Bankers Association.org. So anyway, let me see what you guys and girls are saying in the comments. There we go. Al, what's going on, Al? He's out here. He's always holding me down. We got Freeman from Sip and Talk. And we also got Hey Sharks from Chicago is in the building. All right. I'll see you. Round of applause. Thanks to everybody that has commented so far live. So anyway, ladies and gentlemen, we're right here live at the Mortgage and Bankers Association. This is the report they put out today. Mortgage applications have increased in the latest MBA weekly survey, quote unquote. From Washington, D.C. on March 19, 2021. Mortgage applications increased 1.2% from 1 week earlier, according to the data from the Mortgage Bankers Association weekly mortgage ending in March 14. Now, let's see what they got to say. They say mortgage rates increased last week with all loans types hitting their highest levels in 2 weeks. Rates were still lower than the levels reported in late March and early April, providing additional opportunity for borrowers to refinance. Despite the 30-year mortgage fixed rate has risen to 3.15%, applications for conventional and VA refinancing increase. Ongoing volatility in refinancing applications is likely if rates continue to oscillate accordingly to current levels, said the Joel Klan, the NBA's Associate Vice President of Economic and Industry Forecasting. A decline in purchasing applications was seen for both conventional and government loans. These continues to be strong demands for buying a house. It said there continues to be a strong demand for buying a house, but persistent supply shortages. So we got supply shortages are constraining purchasing activities, and building material shortages and higher costs of making it more difficult to increase supply. As a result, home prices on average purchase loans balances continue to rise, with the average purchasing application reaching $411,000. Wow. The average purchase application is $411,000, the highest since February. So we're seeing housing prices continue to go. But here is the secret sauce into this. The reason why I read all this to you, not to read a bunch of jargon, because I know you ladies and gentlemen can read. The secret sauce to when I saw this, here it is. I'm highlighted for y'all. This line right here: building material shortages and higher costs are making it more difficult to increase supply. So right now, they have a supply shortages of houses around the country, and they have a building material shortage. Now, if you're tuning into this, what is a building material shortage? What are things that are required to build a house? One thing is lumber. Of course, everybody know wood build houses. So now I look at, as an investor, what is building material for housing? So you can look at this data right here. I'm gonna say it again. So right now, with some, you can follow this report. This was released today by the Mortgage and Bankers Association, who tracks housing. And today they came out and they said there continues to be a strong demand for buying a home, but a persistent supply shortage are constraining purchasing activity. That means that we have a continuous shortage of houses being available for sale, and building material shortages and higher costs are making it more difficult to increase the supply. So they're trying to increase the supply of houses, but guess what? Building material shortages are increasing the price. As a result, home prices and average purchase loan balances continue to rise, with the average purchasing application reaching $411,000, $411,000 and $400. $411,000 and $400 is the average purchase application, the highest since February. Now, that right there, as an investor, I'm like, okay, well, real estate. So people are still buying houses. People want to buy houses. We have a shortage of houses, obviously. And they're telling you we're having building material shortages. So who's making building material? What companies out there are making building material? What companies out there are controlling the lumber? What, the nuts and the bolts and the nails? I ain't never built a house, but I was around a couple of them. Right there, it could be an indicator of, hey, what do I look like? What I want to invest in, right? All right, let me see what y'all say in the comments before I go a little bit on this live. Dave, what's going on, Dave? He said, AKA New Mexico. He said, AKA Mexico Stacker. It's good to catch you live. Good to see you live too, Dave. Good to see you. That's my guy. We got our guy Freddie B in the building from Lansing, Illinois. Freddie B, what's going on? You said you're looking into WY, and is that WY apostrophe? Is that Wyoming? Freddie B, how's that knee coming along? I know you said you're getting your bend in your knee. Hopefully you enjoyed the book that I sent you out there, Freddie B in Illinois. Avid listener of the show, been supporting this show's an episode, the most random show out there, for years. So definitely appreciate you for stopping by. All right. Max B is in the building. Max B, that's my guy. You know what, Max B? That's a good point. 3D printed houses. 3D printed houses. Max B coming in here with the gym. Okay, coming in with the gym. That's the gym sound effect there. Oh, WY, the lumber company. Thanks. Okay, got it. Okay. So right there, WY is a lumber company. I thought he meant Wyoming or something, but okay. But anyway, ladies and gentlemen, right there, you're looking at, they're telling you, the Mortgage and Bankers Association telling you, we have a housing shortage due to our supplies being shorted. Why are these supplies short? And you're looking at the housing prices are going up in reverse. Supply and demand, simple and easy, ladies and gentlemen. Hit the wrong sound effects there, y'all excuse me. All right, ladies and gentlemen. Now that we got real estate out the way, let's go back into what we're going so far this year. We're seeing the market just go all over the place right now. And the first one we're seeing, let's look at the indexes performances, ladies and gentlemen. Let's look at the index performances. Index performances. The three major indexes that we follow on the market, of course, is the S&P 500. Y'all like how I got my little investor show cup mug sitting on my little stool now? Woo, when you tune into the investor show, you got to get your investor show mug. It's the only way to read financial reports. Ladies and gentlemen, right here, the index, the three major indexes, we got the Dow Jones, the S&P 500, and let's see. Okay. Just had to make sure I'm getting all type of messages come in. So anyway, we have to look at all the major indexes that we have right now. The Dow Jones, S&P 500, and the NASDAQ. Right now, ladies and gentlemen, with all this wild, crazy market that we've had so far this year, I wrote it down here. The Dow Jones is up roughly 10%. S&P 500 is in the leads, taking over that lead of the Dow Jones. Dow Jones is running the year. S&P 500 is at 11%. And you got your NASDAQ at the bottom at 4%. Overall, all major indexes are positive, even though lately, when you look at the market over the last couple of days, it's just getting beat down. You don't know what's going on, right? So when I look at these markets falling, and I look at the fall of Bitcoin has just tumbled the last couple of days. Even though I'm not a Bitcoiner, I'm not the most technical investor, but I look at this. Every crash, a guy put up a very, you know what, I should have had this ready for my episode. Let me see if I have it. When you look at Bitcoin's rise and fall, whatever you want to call it, Bitcoin, every time you look at every crash, I want to show this to y'all. Y'all give me 1 second. Let me pull this up. This is a live show. Y'all know how we do it live. And for the people out there who haven't caught who's not catching the audio version is available on all major streaming platforms from Spotify. We're on Spotify. We're on iHeart. We on, you name it, we're probably on there. We're on Audible. Audible, that's a new one too. I didn't even know I was on Audible. I see myself pop up one day and what's up, Wes? Wes want to say hey to everybody? Tell everybody, hey, Wes.
Hi.
All right. Good job. I'll be with you in a second, okay? It's a cameo from Wesley there. Y'all give me 1 second. Let me get this thing. I want to talk about this Bitcoin. All right, here we go. Okay. Yes. Y'all give me 1 second. All right. Let me pull this up for y'all to see. Y'all give me 1 second as I pull this up. Bitcoin. As y'all know, I have some Bitcoin. Nothing crazy to write home about, but I have a little exposure. And like I said, to me, it's like the modern day lottery ticket, but I'm watching this market formulate. All right, I'm going to pull this up on my screen here. Y'all give me 1 second. Oh, not that one. I'm sorry, I hit the wrong one. Here we go. No, I don't want to do that. Okay. All right. I had to go through all of this, but I finally got it, y'all. All right, here on my screen here, I saw something that was, let me change my banner here. Bitcoin fall off. Bitcoin fall. The Bitcoin fall. Now, classic technical investing 101. Bitcoin fall. Look at the Bitcoin dip. Look at the previous dips. Back in 2011, Bitcoin was at $35. and it fell down to $2. 2013, it was at $220, fell down to $70. Later on in 2013, it went up to $1,000, fell down to $200. 2017, it was at $20,000, fell down to $3,000. Now in 2021, it hit a peak of $64,000 and it fell down to $39,000. Prince, why are you telling me about this? Looking at these dips, what do you notice about every dip? From the dip in 2011, from the dips over the last decade, what do you notice about the dips? What do you notice about that? Technical analysis, utilizing technical analysis, what I just said. In 2011, it fell from $35 to $2. 2013, $220 to $70. Later on in 2013, $1,000 to $200. 2017, $20,000 to $3,000. 2021, $64,000 was its peak. Now it's at around, they're saying about 39, maybe it's around 30,000 now, 30, 40,000. What do you notice about the lows, ladies and gentlemen? I have this pulled up on the screen. Let me see what y'all are saying in the comments. Y'all think about that. I want y'all to comment live and tell me, what are you noticing about Bitcoin's drastically fall? LK Ross said the entire market is trash. All I can say is hold. Don't let them win. Keep in mind the crap. You said keep in mind this crap my last until the end of the year. He said keep in mind this crap may last until the end of the year. I got what you're saying, LK Raw. I'm a horrible writer myself. Now you notice LK Raw, here it is. The index is winning, but how are they up when most of the market is seemingly down? Help me in this. How you said that? Dispense? LK Raw, what you're noticing is you're looking at the market every day. I told you those numbers because I want you to step back and quit watching the market every single day. This is why I did that episode previously when I said your 401k will outperform your investments, because your 401k does what? It takes away the emotions. It utilizes dollar cost averaging, and it doesn't care what the market is doing. And you invest into the index consistently over time. So yes, the indexes, yes, they're getting beaten up. They've gone down. Think about last year was a wild year. We got hit by a pandemic, and guess what? The S&P 500 still ended up high, like 15%. All right. Dave, what's going on, Dave? Dave said, hey, Wes. Hey, thanks. Appreciate that. That's Wesley. That's my now 10-year-old son. It's kind of crazy. He was sitting on my lap when I very first started recording these. Now he's walking around and talking. Time flies. So right here, Dave says get bigger and bigger. You're right. Max B, it falls, then bounces back higher. Max B, there you go. Every Terrell said it comes back stronger each time. There you go. Okay, Ross said disconnected. Sorry for the time. Okay, disconnected. Okay. No, the market is not disconnected. You're just watching it too much. Zoom, step back. I didn't tell you some Jedi mind trick. Just go back and look at the S&P 500. Look at SPY ETF. Look at it. Where was it at the beginning of the year? Look at where is it at now. Now, has it had some wild jumps in between? Yes. But sometimes when you're watching the market every day, down 200 points, down 300 points, market down 400 points, the market is just not doing well. But when you step back and zone back, you realize actually we're making slowly trend up. That's why I showed you the Bitcoin. Every time I notice, I'm not a Bitcoiner. I don't know what it is. I haven't jumped all the way on the fence. I'm on the fence, but I ain't jumped across and believing in it. I think it's going to be here to some capacity. When I sit back and I analyze this, I start to wonder, every time over the last decade, this thing has crashed, like y'all said, it got bigger and bigger and bigger and bigger. Let's put it up on the screen again. Look at it. It went from, look at the bottoms, $2 to $70 to $200 to $3,000 to $39,000. Next thing you know, the bottom might be 50,000. Then the bottom might go to 60,000. So don't look at it every day that you forget. Step back and move. Right? So look at those bottoms. Those bottoms are getting bigger and bigger and bigger and bigger. That's what I put that up to show you to keep in mind. Now, when everybody gets so caught up on the market, I want y'all to look at something. You're like LK Ross said, Prince, the market is stinking up the place. What do you mean? And I'm going to tell you right here. Where am I at? Let me use this one right here. We already went over that. We're going to go to Google and I'm going to pull up the SPY. We're just going to pull up the SPY. I'm sorry, I hit with my Google. Here we go. Goodness, why I keep going to my Google Mail? I don't want to go to my mail. SPY ETF. So right here, the SPY costs. Let me share the screen here. The SPY. So right here, ladies and gentlemen, we're going to go back to the index performance. Look at the SPY. It costs $410 today. $410, ladies and gentlemen. You can see it pulled up on my screen. This is just the S&P 500 ETF. $410. Now let's go back to year to date. YTD is year to date. Year to date. Beginning of the year, it was at $368. So somebody who brought this in January continuously brought it. Guess what? It was at $368 at the beginning of the year, and now it's at $410. Right? Let's look at the Dow Jones. The Dow Jones, one that I know of is DIA. DIA stock price. You look at DIA, Dow Jones ETF. Let's go back to year to date. Today, it costs $339. It started off the year at $302. So even though we have this wild year that looks so crazy, guess what? We're still up. We are still up. Don't be so concerned that you're looking every day that you forget to get out of yourself and to take a step back. All right. Now, the next thing I want to get into, ladies and gentlemen, with all of this market is going, whatever. Who has heard about or seen the labor shortage? The labor shortage, ladies and gentlemen. Who has seen and heard about the labor shortage? We saw here on the show, McDonald's is giving a signing bonus. McDonald's is giving a signing bonus. Dairy Queen is giving a signing bonus. This was the other night. It's an IHOP not too far from my house. One extremely late night. I got an urge for some pancakes. I was out doing something. I said, I'm going to grab me some pancakes. And I'm going to do some studying. I'm going to do some reading. I go in. I go in. This is a real story. This happened probably, I don't know, earlier this week. I go in. I asked to be seated. I said, hey, can I just have a booth? The place looked pretty empty. It was pretty late at night. Just 24-hour IHOP. Hey, can I just have a booth, by myself, whatever. The lady says, I'm sorry, we're only doing takeout. I said, only doing takeout? What do you mean you're only doing takeout? She was like, well, we don't have enough workers in right now. The people that were supposed to come in didn't come in, so we can't facilitate taking tables right now. We only could do takeout. I said, okay, no problem. I wasn't interested in really the food. Too funny. So I just got up and left. Well, I didn't get up because I never sat down, but I just said, okay, no problem. I left. And due to their manpower, they could not service tables at the time. Then I want to say I came back a couple of days later. And it was this one lady. I've been to this place before. I've seen her there a couple of times. This one lady, she's handling 4 or 5 tables. I go to her and I'm saying, hey, are you the only one working tonight? She's like, yeah, we're pretty short staffed. So you notice in the restaurant industry, that's my own personal take. Everywhere I go, the restaurant industry seem to be having a shortage of people to work. So if you don't know who Brinker is, Brinker International, the famous brand that they own is Chili's. They own 1,600 restaurants across the country in 29 countries, and their makeshift brand is Chili's. I pretty frequent different Chili's sometimes here or there. for lunch or something like that. So Chili's, ladies and gentlemen, I'm pretty sure you guys and girls heard for Chili's. We're going to listen to the CEO on CNBC. So let me play this for y'all.
Wyman Roberts, good to have you this morning, Mr. Roberts. Obviously, your investors are quite happy given the performance of the company over the last year. But I am curious. Let's start off, though, with a lot of people's questions these days, which is the labor market. I think you've said it's one of the toughest you've ever experienced. Give us some sense as to why that's the case.
Well, I mean, the good news, David, is it's tough because with the vaccines, the stimulus, and then it all hitting at kind of spring break, a real high volume time period for the industry, sales just took off. So the good news is we had great sales momentum in the industry, specifically, with us, we ended April up over 10% in sales and traffic. So there was a real demand for more teamwork, team members, and that pushed the system. The good news is we set a goal to hire an additional 10,000 team members in a 10-week period. We've surpassed that. We've hired over 15,000 now. So the good news on the labor front is the supply is kind of meeting the demand now. We've got some work to do to get everybody trained and get everybody working efficiently, but those are short-term challenges for us, and we're optimistic about our ability to kind of move forward as we enter into the summer, and we're just really more excited about the growth opportunities and what we're seeing with regard to sales, pre-pandemic levels being beaten, as well as moving forward.
I obviously want to talk a bit more about that, but just to come back to you on your ability to actually meet your goals in terms of hiring, were you surprised? We've had any number of CEOs and somewhat similar businesses, Wyman, that complain that they really are having a very hard time, but you managed to meet.
Now, right here, I don't know the guy name here on CNBC, but he's asking the CEO. He said, hey, many CEOs have come on to CNBC and said they're having a very hard time meeting labor market requirements, right? Why are they having very hard times meeting labor market requirements, right? So, and they're surprised that the CEO of Brinker Chili's, what are you doing to meet the labor market requirements? So we're going to listen to what he got to say right here, but I want you guys and girls to listen to see how many CEOs are out there crying about a labor shortage, and we're going to see why that happened.
Your goals, why?
Well, I think this is where our scale can help. We've got an amazing people works department. We did have to, kind of enter into some new areas in terms of how do we recruit and how do we retain these team members, and we made some investments in that. It's a unique period of time for the industry, for the country, right? With a lot of people still unemployed, and yet a fairly robust economy. So we put a lot of things in place that helped us recruit at a level that we haven't had to go to in the past, and that's what we did. And now we still have some spot challenges. Some markets are a little tighter than others, but overall we feel pretty good about our ability now to be staffed and to be ready to deal with the increase in sales, which again is the bright spot here, is that sales are looking good.
Wyman, it's Morgan. Given the CDC guidance last week.
All right. So essentially right there, they're talking about this labor shortage. A lot of fast food, blue collar workers are talking about this labor shortage. So I wanted to play that so y'all can see that, hey, this is a real thing that people are talking about, the CEOs of companies are talking about. So what I want to do here is now I want to head over to the college. Did I say that right? The conference board. What I said, the college, I'm about to say the college board, the conference board. So we're going to look at the conference board. The conference board is a conferenceboard.org, and they talk about the U.S. labor shortage, challenges and solutions. Labor shortage having the strongest impact in the U.S. economy. It has left unchecked. Today's conditions could easily develop into one of the worst labor shortages in the last 50 years, particularly for companies that employ blue collar and manual service workers. Through comprehensive data research, it is our own survey. The Conference Board explores likely outcomes of future labor and shares solutions to hiring and retention challenges used by organizations affected by labor shortages. So right here, conferenceboard.org is a very big organization. Very big. They do a lot of research and data that the market uses all of the time. So right here, they said, based on results from the Conference Board Labor Shortage Solution Survey, 85% of companies in the mostly blue-collar industries reported recruiting difficulty versus 64% amongst companies who mostly employ white-collar industry. Further, almost at a quarter, 23% of companies is mostly white-collar industries reported having neither recruitment nor retention difficulties, where this is true for 8% of companies mostly in blue-collar workers. No secret, blue-collar manual workers is having the shortage. Why is this shortage happening and the challenges that it proposed? For decades, employers complain about the difficulty of finding qualified workers, even in the loose labor market when widespread shortages did not exist. In this report, we urge that the time is different. Employers' complaints have merit. Okay, employers' complaint have merit, and the labor shortage problem is having a strong impact on the U.S. economy. If not addressed, the problem will get worse. Yet most U.S. labor markets, through leaders, are currently mostly focused on the risk of massive technology unemployment in the distant future than on the existing labor shortage. If not unchecked, today's conditions could easily develop into one of the worst labor markets in the last 50 years. So right here, they said, where was it? Where were I? I should have my glasses on too, right? Okay. So essentially, why are we having this big shortage of people, blue collar, manual labor, people wanting to do work? Where did this come from? Why is this happening? So right here, they're saying the working age population of non-college graduates is already shrinking. As a growing number of young adults are enrolling into four-year colleges, the number of working age people with a bachelor's degree is becoming bigger and bigger and bigger and bigger and bigger. So more people having more education, so they don't want to do those jobs. Working age population growth is slowing to a halt. The massive retirement of large baby boomers generations is bringing growth into the working age population to a halt. A trend that will continue throughout 2030. So they're saying you got a bunch of old people, baby boomers, that are aging and retiring. The recovery in the labor force participation has been disappearing. A large increase in disability ratings. An important reason for somewhat disappointment in the labor force participation is the large increase in recent decades of the number of people not in the labor force due to disability. Almost all of them were a lack of college degrees. So you have people who don't have college degrees at home saying, ouch, my back. Maybe they do have real problems. I don't know. That is a concern. The large drop in participation rate of 16 and 24-year-olds, while good for a society to stint, since it's a result of higher education attained at this age, the steep decline in labor force. Okay, so you're saying people just got more education, they don't want to do it. Now, that's a very good report they put out. Give a round of applause to the conference board for their research and survey. Now I'm going to tell you why I think it happened. And I'm going to give you a report to back up my claim to why I think this is really happening. Y'all comment, why do we have a labor shortage of blue collar workers? What do y'all think is happening? People lazy? People don't want to work? What is it? What do y'all think? I'm going to pull up here while I pull up my next screen and show y'all. I'm going to back up a report from the Bureau of Labor Statistics. So before I get into that, let me see what y'all saying in the comments. See if y'all seeing anything. Okay. LK Ross says they will have to pay more across the board. How do you think inflation will affect stocks in the long run? They will go up as well, right? Max B said hourly income plus safety of virus. Okay. Derek Gilchrist. He says unemployment is more than their wage. People aren't interested in working for cheap. He said people aren't interested in working for cheap. All right, ladies and gentlemen. Let's go to it. Let's get to economical data. We ain't got to suspect. We're going to go to actual studies. So when you go into work or you're talking to your friends or you're laying down by your spouse or whatever you're doing, having that pillow talk or whatever, you're going to say, hey, I tuned into the Investor Show. And guess what we looked at today from the Bureau of Labor Statistics? This is what I think it is, ladies and gentlemen. I think it's an increase in costs, labor costs. Labor cost is increasing. Labor is becoming more expensive. And old school companies who think they're going to pay $5 an hour, that's not happening anymore. I just had a conversation with one of my friends. He was just telling me, he was saying, we were talking about what we was talking about. We was talking about people that invest. He was like, well, Prince, poor people don't invest. Middle average people don't invest. I said, yeah, that was true 20, 30, 40 years ago, but that's not true anymore. He said, Prince, what do you mean that's not true? I said, think about it. People have now, stocks are more affordable because people can now buy penny stocks and people can, trading fees have gone down, dwindled to nothing. Trading fees used to be $500 at one time. To buy a stock costs you $500 to buy it, $500 to sell it. Now you can do that practically free. The second thing is accessibility. Before you needed a stockbroker, you had to be in a major city or whatever. Nowadays, people can just pick up their phone, go on a website or whatever, and buy stocks immediately. People can download Robinhood, and by the end of this week, buy their first stock for $1. Now they can buy fractional shares. That has opened up to a wide new market. Accessibility and affordability has opened up a whole new grade of investors. Long gone are the days that investing in stocks and investing into companies was reserved for the rich and wealthy. Now the everyday person with a blue collar job can go out and invest into startups. They have a plethora of information. It's affordable now. I can take $500 and go to companies, websites out there, then let me invest into pre-IPOs now, all type of things that are out there open to investors. It's almost too much information. But investors now, they have a plethora of knowledge, they have accessibility, and it's more affordable than it ever was before in a time in our history. That's what created a new age of investor. But I don't want to ramble, ladies and gentlemen. Let's get to what I'm talking about, labor costs. Right here, what I have pulled up on my screen here, this comes out once a quarter. This is the economical cost. This is the economical news release. This is the employment cost index summary. This particular one was released on Friday, April 30th, but this is our last one. We won't get another one until July. So at 8:30 Eastern, Friday, April 30th, the employment cost index for March. This came out in April. This is for March employment cost index. Comes out every quarter. This is on BLS.gov, the Bureau of Labor Statistics Economical Cost Index Summary. Compensation costs for civilian workers increased by 0.9%, seasonally adjusted for the 3-month period ending March 21st. The U.S. Bureau of Labor Statistics reported today wages and salaries increased 1% and the benefit costs increased 0.6% from December 2020. Compensation costs for civilian workers increased 2.6% for the 12-month period ending in March 2021 and increased 2.8% from March of 2020. Wages and salaries increased 2.7% over the year and increased 3.1% for the 12-month period ending in March 2020. Benefit costs increased 2% over the year and increased 2.1% for the 12-month ending in March 2020. Compensation for the private industry workers increased 2.8%. Ladies, I'm not going to keep going all through this, but you can see healthcare benefits increase right here. Look at the compensation, look at the wages and salaries. I got my first job. I tell y'all a million times, my first job, I got $5.25 and I worked at Domino's Pizza, and that was a good job and I was happy to have it. Now, you can't pay $5.05 for me to flip pizza, right? I mean, one, I'm 36 years old and I'm a little bit more qualified than $5, just a little bit, not much. But the average 16-year-old, now you got to look at it. People are looking at, raise minimum wage. You don't have to raise minimum wage. The economy, look at John Abrams, the laissez-faire effect. Laissez-faire, hands off, and let the economy take care of itself. One, people at home getting unemployment, people are getting stimulus checks, and these restaurants and these blue collar jobs are not paying livable wages. People are looking for other things to do. We live in a more educated economy now. Everybody's fancy. Everybody got the little fancy degree. Degrees became more accessible and they became more flexible to earn. Back in the day, if you didn't go to college right out of high school, you just didn't go. Nowadays, you can be 35 years old and say, hey, you know what? I'm tired of washing dishes at this restaurant. No shots out to nothing wrong with washing dishes at a restaurant. But hey, I want to do something a little bit better. I want to become a nurse. You can take night classes and become a nurse in a year, 2, 3, 4, 5 years down the line. That was unobtainable years ago. Now they got night classes, online classes, between classes, come to your job classes, technology. So now you're looking at the cost of labor is increasing. And the companies that's going on that old school policy of, hey, we're just going to pay you dirt and you're going to come in. That built with people are getting stimulus checks, people are getting unemployment. They're making more for unemployment than they're going to the job. And guess what's going to happen? They're not going to go. So it's the rising cost of labor, I feel. And when you look at the March Employee Compensation Index, you can see the cost of labor and benefits and compensation is just going up, 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 up. And these companies, so if the cost of employment is going up and you got stimulus and you got people, unemployment benefits are going up, these blue collar jobs are not keeping up. They're not keeping up with that. Nowadays, everybody got a piece of paper. Everybody's somebody. Nobody can just work at AutoZone and work with their hands anymore. Nobody can do that anymore. Everybody's, oh, I'm somebody. Oh, I got to go do this. Oh, I'm this and that. Right? So anyway, ladies and gentlemen, that's what I think is going on with that. Now, let's go over. I'm going to wrap up today's episode. Y'all like today's episode. Y'all hit that thumbs up button as I do this recap. Let me put in a recap here. Recap of today's show. We talked about the index performances. Even though we've seen stocks falling off over the last month or two, the NASDAQ is still up 4%. The Dow Jones is up 10%. And the S&P 500 is up 11% as of this recording. Even though we've seen the market go crazy. We're 4 or 5 months in right now, 5 months in, and we're up 11%. Not too bad. Definitely beating inflation so far before inflation goes crazy. So we talked about the index performance and stock sliding. Next thing we talk about the fall of Bitcoin. But I noticed over the last decade, every time Bitcoin falls, it is having a higher and higher fall. One time it fell to $2, then it fell to $300, then it fell to $400. So if you draw that out, it's doing this over time. Next, we talked about the real estate market. And we discover a gem. Inside of reading the real estate market, we noticed that there's a shortage of building materials, a shortage of lumber, a shortage of things to build houses. We're having a housing shortage around the country. Next thing we talked about was the labor shortage. These companies, we listened to the Brink International CEO and how they talked about the restaurant industry, blue collar jobs, can't find anybody. And we looked at a report from the conference board to kind of go over this labor shortage that we have going on. And then we also notice, my personal opinion, the cost of labor is going up. And I think that a lot of blue collar companies are not keeping up with the cost of labor going up. You can't pay people $5 an hour anymore and expect them to come down when you have all this competition going on, right? The economy is shifting. I guarantee you, if let's say if you're paying $10 an hour, if you raise it to $15 or $20 an hour, you probably get some more applicants. Look at Amazon truck drivers, right? They're making $20-something an hour. On average, $15 to $20 an hour, most Amazon truck drivers, right? Max B said, true. A lot of small businesses were starting to doing this. Okay. Oh yeah. He said, for prime example, plus new jobs like YouTube. Yes, you have new things like you can start a YouTube channel. People can start podcasts. People can sell stuff online. The rise of entrepreneurship, things that didn't exist before. Like I tell people all the time, podcasting and YouTube 10 years ago was for rejects. Now you have people that their job is a YouTuber. When I started podcasting YouTube, I didn't think that it was going to get to, oh, this is the next way. Now I just saw Netflix is getting into podcasting. That's crazy. Now people can get on YouTube. People can get on Instagram, Facebook. They can start a podcast now. They can build their own clothing brand now. There's so many other ways for people to earn money now that, hey, why would I go to McDonald's and work for $10, $11 an hour when I can take my driver's license and go drive Amazon trucks? Right? So you're right on that. I definitely agree. Ladies and gentlemen, on Friday, the next big interview will be Mr. Ted Penna will be in the building. I thought I had his thing up here. Mr. Ted Penna. If you know who Mr. Ted Penna is, he's the father of the 401k. He has a documentary. They include him in a documentary on episode 2 of Money Explained on Netflix. He will be here today. He's the father and creator of the $6.7 trillion market of what we know today as the 401k. So I'm definitely would love to have him on to talk about the 401k, the current state of retirement, all that good stuff. You got questions you want to ask, definitely DM me, and I will definitely ask them during the show or the episode. So yes, that will be Friday at 2 p.m. Eastern. 2 p.m. I think it's like 2:05, 2:10, 2 p.m. Eastern. You can find us live, and if you can't catch it live, you will catch the playback on all platforms, from Audible to Amazon to iTunes, wherever you catch this, YouTube, Instagram, whatever. So definitely, y'all tune in for that. But anyway, ladies and gentlemen, I hope y'all enjoyed this episode. If you enjoyed the episode, you hit that thumbs up button and you tell somebody, hey man, y'all better tune in to the Prince of Investing, best and random show online. But anyway, ladies and gentlemen, I definitely enjoyed my time. And to the next video, podcast, cartoon, or whatever else crazy y'all see me do around the globe. As always, my name is Prince Dykes, and I'm out. And peace.